Happy Thanksgiving to everybody. We're live here, November 29th, live stream number 74. Super cool. I was just sitting here for a couple of seconds. I really wasn't that chatty this evening before it came on the live stream. Just kind of reflecting. This is the time of year, certainly to do some reflection. 2019 has been an interesting year, certainly for me. Probably one of the most challenging years I've had. And it was interesting. I seeing some of the comments pop in the group here really made me realize how lucky I think we all are. It's easy sometimes to lose track of that. And I think we all have a lot to be thankful for. It was interesting. I don't know why. I think I was searching Mr. Rogers, the new movie that came out, and I saw a commencement speech actually when he received the Lifetime award. It's only a couple minute video. It's certainly worth a watch. And he asked the audience to take 10 seconds to reflect on somebody who they were thankful for, or somebody that had influenced them. And I think that was a very Mr. Rogers type of thing to do, basically to captivate an entire audience and have them kind of acting like a kid for a couple seconds and reflecting. And certainly hope everybody had a great Thanksgiving. Hope everybody appreciates coming on and spending a few moments discussing the stock market. I didn't pay a whole lot of attention today. I kind of had a feeling today was going to be a little bit of a relief from what has been just a historic melt up in the stock market. And I certainly did not want to miss this Friday's opportunity to come on and talk to the group. This is one of the things that I'm most thankful for. Is I really do believe that we're building something very, very special here. I had a comment come through the channel just today. It was a very rude comment, and it just blocked him from the channel right away. I don't have a lot of patience anymore for spending my time to come on and speak with people about investing and really trying to break through barriers for folks if it's not going to be appreciated. And I think that's why a lot of the people actually tune into my message. I've set up some criteria for myself. And I would say that with the majority of the financial channels that have emerged on the YouTube landscape, it may sometimes appear very difficult to identify what it is will work for you in your own personal lives. I will just say this. I don't think there's a whole lot of value in coming onto a platform like YouTube and just saying, here's my portfolio, here's what it is. I think there needs to be a little bit more to that. I've always held the channel creators up to a little bit higher level of integrity. I've always thought that the money topic in and of itself is if you were doing it right, it shouldn't really be that much of a focus in your life. Financial stewardship, once you learn it and once you kind of incorporate it into your day-to-day living, yeah, it's in the background. It drives a lot of how you approach things, how you deploy your spending habits. It really does. It really kind of defines how it is you deal with money, the inflows, the outflows, etc., that type of thing. And I think it's extremely important to understand that when I'm looking to provide this message to subscribers, I really, really try to put myself in the position of the viewer. And I think that's rare nowadays. I really do. And I don't mean to impugn others' work. I don't. There's a few channel creators here in the group that I'm going to run down the list for you guys to make sure that we're accounting for all the folks that are coming in and wanting to offer their testimonial. But I just think coming onto YouTube and throwing a portfolio out there just to declare it without any acknowledgement to how it could be received by the audience is a little bit arrogant and slightly irresponsible in my opinion. I think sometimes there's a little bit of a shallow type of message when those types of things are put out there, and you really have to be leery of what folks' intention are when they're putting that material out there online. I understand the landscape is conducive to that type of thing, and there's really not a whole lot of checks and balances either for people who are coming on to social media and pushing their opportunity out there. I think everybody wants to be multimillionaires. If nothing else, there's been a couple pieces of content that have been put out this week. The first by a YouTube creator called Passive Income Investor and myself. And I thought these two pieces of content were really quite good. And Passive Income Investor is going to kind of get my shot out for the week. Okay. Now, I don't know if he's going to make it in here or not tonight. He's probably got more energy than I could ever muster up on a YouTube video, significantly younger than me, but he put out a six-figure video that I thought was really quite good. And it was talking about his $100,000 mark. I thought it was really quite good. What I found was really good in the video, and if you really were looking to extract some nuggets from that, and I have to be honest with you guys, it wasn't until I went back and looked at preparing for that portfolio rollover of $100,000 that I even realized that the portfolio had tripled over the last few years. Why is that? It's because I'm usually spending the majority of my time thinking about the future. I don't typically reflect on the past all that often, and in all fairness to myself, I didn't discover this until I really looked back, and I thought, I know I set up financial goals video at least a couple years ago, but I think for me it was interesting. It proved to me how fast time flies. Which it really does, and it also proved to me a couple things about investing. Number one, of the power of investing in and of itself, how quickly you can grow your money. Now, the one connection that I did not make in the $100,000 video is that I've grown two accounts simultaneously. And in the passive income investor video, it was really cool. He made the point of him being a little bit more entrepreneurial. And I thought that really it stuck with me because when I talk about people just coming on and throwing their portfolio up online, I thought it really came full circle when he was basically saying, "Look, I'm really nobody special. I made less than $40,000 every single year I was investing. The difference between me," he was talking about himself, "and most people is that the investing journey that he embarked upon, he basically took out a loan from his mom and dad for around 22,000, I think, to start a business, and was in hock with his mom and dad to pay the money back, and eventually did pay the money back, but he explained that being in debt like that just bothered the hell out of him." And that's a part in the video where I kind of perked up and I was like, okay, you got my attention. This is pretty legit. And everybody will invest for different reasons. I was able to glean from that YouTube video that one of the main reasons why he invested as aggressively as he did over the course of, the 5 years in generating the six-figure portfolio, was that he would never be in debt again. Uh, he felt like he didn't have a whole lot of capital to get involved in the real estate game. Check. I agree. Um, and also for lack of better options to secure your financial future, what other vehicle would you contend gives you the best chance of growing and accumulating wealth that fast? What he was able to earmark is that he was able to contribute around $60,000 over the course of that 5 years, which, if you remember from my video, that was about the right amount for me too. Right about that magic sweet spot where the contributions flowed in at about 60,000. The remaining 40% was around uh, the capital appreciation piece, right? Just what was rendered from the portfolio from investing. But passive income investor, man, gets my shot out for the week, certainly. And I don't know if he'll make his way into my live streams. I thought seen him a couple times kick in, but definitely earned my shot out of the week. I do have the rest of the channel creators in here. Investing with Aaron has been gracious enough to come in. I really hope everything is well for you. Also, coming on and offering an investment testimonial on his channel. Obviously, you guys know Lydia Santiago is in the group here. We just did our collaboration last Saturday, which I couldn't have been more pleased with that product. If you didn't catch that collaboration, you're missing out. I thought there was some really good conversation in that. I couldn't have asked for a better first time collaboration. So it went really, really well. And I think that'll help a lot of new investors because my perspective is my perspective. If you want to catch a perspective from Lydia or Aaron or Travis or Ryan or any of these other folks that are making their way in tonight, I'm going to get to these folks on the call outs. Definitely save them to your featured channels. Go and subscribe. If you are another featured channel, make sure that your 10 featured channels are filled up to the right. It's very, very simple to do. But if you need to fill those up and get your endorsed channels in there, do it. Okay. So people can make their way to yours and then hopscotch from different channel creators. Okay. So make sure that if you haven't done that, take up all the slots. I was guilty of it myself, and I had a little bit more room there to add some featured channels on there. And I've done that. So I challenge each and every one of you guys to do that. Okay, I've got Hidden Freedom Investing, who runs another phenomenal channel, is trying to build up that channel, get a nice subscriber base, and anything that we can do on the channel to help with that opportunity. There's a lot of people who review the Independent Investor channel live stream after we've posted it. It gives those folks an opportunity to come over and check out y'all's content that you're trying hard to put out. When you first start, it's tough. It really is. All right. So I want to check out Hidden Freedom Investing. Gen X Dividend Investor will probably be on my top 10 list for things I'm most appreciative for in 2019. I didn't know Gen X Dividend Investor before this year started. I can certainly conclude this year in 2019 and look forward to 2020 knowing this individual. And I hold him in the highest of regards. I absolutely do. There's a little deeper meaning for that as to what was said on the channel. Obviously, the content that's being put through is of the optimal quality. It's legit. It really is. And I think he does a really good job of bringing people together as well. I see him on every single community tab of every channel that I don't know or does know that exists. I don't even know, but there it is right there, man. So he must really scour the landscape. And I just think that proves to me a level of devotion to the project. And that goes a long way with me. It really does. So Gen X Dividend Investor, happy Thanksgiving to you as well and your family. Travis Williams popped in here as well, so I made my list, but I did see, so Travis runs a really, really good channel as well. And then finally, Ryan Giffen, who I just saw there as well, pop in. Absolutely want to provide some accolades for Ryan, who's got a really interesting investing philosophy. And I think a lot of people are probably going to tune into Ryan's channel as well, and probably find a lot of excitement for investing. Okay. Um, a little bit different, a lot different than me, and a lot similar as well. Looking to leverage the stock market game for personal empowerment and wealth building. And anybody who has that level of objective and the ability to teach along those lines is cool with me. And Ryan definitely fits the bill there. So that's who I've got right here. I give the shout outs before the 15-minute mark on the live stream before we get into the list of things that I'm thankful for in the investing world, which is going to strike up a nice conversation. But just wish everybody the best as we conclude 2019. I'm extremely humbled. There's been some real developments. I think we've increased revenue on the channel by about 140%, I guess. So I'm humbled. I am. I've engaged in a wealth building strategy with my YouTube earnings. I'm very, very open about that. I just think we can do a lot more powerful stuff if I'm able to put what it is I'm good at. I'm good at taking a little bit of money and building it into something spectacular. That's my skill. All right. Some people can play guitar really, really well. Some people can do one thing really well. Some people can play a sport really, really well. My big leagues is finance. That's what I'm really good at. I'm good at taking a dollar and turning it into $2. I'm good at taking that $2 and manufacturing $4. Okay. And so on and so forth. So much so that I actually believe that you can teach this stuff to people. Okay. So if you're new to the message tonight and you're wondering what this is all about, I break down barriers surrounding the financial topic because I'm not satisfied with the current status quo of how um, not non acceptable financial topic is as a discussion. Okay. It's not acceptable. And I think the people who could render the most benefit from this are the people seemingly who turn this information off the quickest. I think we need to get over that. Okay. Some of the people who would benefit the absolute most from sitting back and listening to what I'm talking about with the things that I'm most thankful for in the investing world. There's a reason behind every single one of those things, and the people who need the information the most are the hardest ones to get to. They really, really are. And there's a lot of different reasons for that. It's one of those topics that some people believe that because they have money, it automatically elevates them to a status of being able to preach to everybody else. I completely disagree with that premise. I really do. I think that there's people out there who have some financial stature in the world, but they're a mess in every other front in their life, and therefore they try to use the fact that they do have money to make up for other deficiencies that they may have in your life. So I always try to come full circle a little bit and say, yeah, you might have this money thing licked, man, but how is the rest of your life? How is your health and well-being? Okay. Are there some things that you could work on in other aspects of your life? I'm just kind of going through an interesting time now in reflection of 2019 with regard to my spiritual health. Am I doing the right thing? Am I making all the right moves? Is the channel growing as quickly as I would want it to grow? Are we reaching the right amount of people? Are we reaching enough people? Am I doing enough on the channel to really push the message? And so it's a constant battle with me trying to find that perfect balance of engagement on the channel and also keeping a little bit of sanity between my ears as well. If you don't know what I'm talking about, start a YouTube channel and tell me how you feel 3 or 4 or 5 or 10 years after the fact. You really do have to love this topic. And that's why for me, it really, really keeps me going when I hear people pay it back to me and say, thank you so much, Ryan, for getting me introduced to the stock market. I would have never had this information had you not had the courage to come on and open it, to push it out to an open mic, to whoever out there is willing and open to consume the information. And to you folks out there that provide that level of validation for me, thank you. I am absolutely humbled and I am thankful for you. I'm thankful for the people who do, in fact, do a lot of commenting on the channel. But I also know that there's a lot of people out there that don't do a lot of commenting on the channel, that sit back and they really do listen and consume and put to work these very, very simple techniques and strategies that can be used, quite frankly, to build some serious wealth. If in fact you're serious about that, it escapes a lot of people. It really does. I don't know if it's fear of success. I don't know what it is. I typically can't put my thumb on it. I think that most people will live their life and be just fine, even if they never find some of these wealth building strategies for themselves. However, for those folks that do look to take an active pursuit of this wealth building strategy, let's go to work. Okay. Because the couple videos that were released this week, I was satisfied with how they were received by the community. It's a little bit risky coming out with a video saying, "Hey, I've met this milestone," but I really did have an underlying message there, in that the program works. Okay, investing can work for me, and obviously it has. The idea is that it can work for anybody. The idea being that if you tune into a video like that and you look at it and say, God, I can do that too, that's kind of where the magic happens. Okay. It's not a pie in the sky thing. Hey, you come in, you sit down with a financial planner, they give you a nice pamphlet, you set up a DCA, you set yourself up with some mutual funds that are costing you an arm and a leg to own, and somehow that's magically going to make you wealthy over time. Do away with all that. Do away with it all. The quicker you can get your dollars in a tax protected and wealth preserved account, the better off you will absolutely be. All right, guys. So, again, welcome to the live stream. I always do somewhat of an intro, and I wanted to get the shout outs out before the first 20 or so minutes for people who come in, check in, they say hello, and then they're off to enjoying their weekend, which I tip my hat to those folks as well. Want to cruise up to the top of the stream here. There's just a ton of comments in here. I do want to kind of try to take these in succession if I can. I had Bob in here, man, and Bob's just been an awesome supporter of the channel. Some really good conversation throughout the year, and I just want each and every one of you guys to know that those don't go unnoticed. I put a little piece of data log in for each and every person here. I obviously don't know you personally, but I honestly feel like I do, and hopefully you feel the same about me. I just thank you so much for your support, and all good as well right below. Probably one of the quickest ones to pop in there. I think they have a competition between her and Bob who can pop into the live stream quicker. I just can't ask for any better devotion than that to the message, and I hope we're delivering, always trying to remain as edgy as we can, trying to remain as piercing as we can with the information, because this stuff has to get communicated. There's no other choice. It has to. I will come in here and I will talk for 2 hours straight, because it's that important of a conversation to get out with people. And if it just so happens to be 1,000 people every week that tune in to the message, then so be it. I'm okay with that. As long as we're pushing it out there, I can rest easy knowing that the information is being pushed out to the best of my ability, and that the opportunity is being pushed out there for you and your families if you're lucky enough to find this information. Are you going to be able to invest and build a net worth of $100,000 in 5 years? I don't know. But if nothing else, we've proved what's freaking possible. Okay. That's not monopoly. All right. That's real money that's really invested. And a lot of you guys would say, "You know what? I appreciate that, Ryan. I know how much you've invested and how much you've, managed your account." But for you guys that say, "Good grief, if it's possible to do it in 5 years, what's the love lost if I can do it in 8 years? Who cares?" You know? The idea is that at some point in your future, you're making decisions to set yourself up for the potential to reflect back and say, "God, I'm so glad I made that decision. Would I have been in this position without investing? Hell no." Those are some of the rhetorical questions that I would expect you guys to answer for yourself as you look to get started, or you're already on your investment journey, right? And you're looking to reflect back on some of the decisions maybe that you've made, some of those decisions that, maybe I shouldn't have made, maybe I regret that one a little bit. That's okay. We've lived and we learned, we tough through it, we persevere. Very, very important, man. But Bob and all good. Really appreciate you guys coming in here. And of course, investing with Aaron says he was at the gym trying to work off some calories for the turkey. We had a pretty good dinner too yesterday. It was really nice. It was really nice. I've had a lot of time off of work to reflect and get my mind right. You guys think I'm laser focused on the Independent Investor channel? You should see me at work. My level of devotion is about as top as you can possibly get. I'm devoted in all things in my life: family, profession, and investing. And my spiritual and physical health are right up there at the top, too. I'd like to stick around as long as I possibly can, God willing. So we're prepared to make that happen. All right. Always trying to improve. That's the whole idea in this gig. The Canine 7 popped in here and says, literally everything seems overpriced right now. It's funny, I tested that hypothesis and I see where you're saying that. It seems as if that might be true. I just didn't see it in the data. Um, we're if not fairly valued, a little bit slightly overvalued in the S&P 500, but very, very slightly. I really didn't think that this thing has run away from us. This is such a broad market rally with such support across all the sectors. There's been some broad participation. If there was any areas of the market where I would say could deserve some attention are in the small caps. So I'm excited to see. I own all three of the ETFs in the different buckets. Okay, so you guys understand the VBK, the VB, and the VBR. I believe are the three options for the Vanguard's small cap offering. So the VB is the blend, VBR is the value or growth. I believe it's growth. And then VBK, I believe, is value. I may have those reversed, but anyway, I do own all three. But I would look for those, since the strength of this market is so wide and there's such a nice breadth across all the sectors. I would look at small caps, and then I'm still fairly interested in developed markets in Europe, being kind of a place of emphasis right now. I will give you guys a heads up, less than a half hour. I would stick around on this live stream because I'm going to be revealing some of the strategic defensive maneuvers that I made in the portfolio. The Roth IRAs are on lockdown right now. Okay. I've got those investments set up the way that I want them. They are ready, right, wrong, or indifferent, to go into a potential downturn. I've levered the portfolio in such a manner to where the $6,000 contribution limits to the Roths are not going to prohibit my ability to transfer large chunks of capital into the market when and how I deem necessary. And I'll declare those moves to you guys. You guys are going to be very interested in some of the moves that I've made. You saw a small taste of that, but I didn't roll out the $100,000 portfolio. But there were some very interesting and strategic changes in those, very well thought through, to keep my exposure to the S&P 500 within reason. Okay. give me some opportunities, especially in the brokerage account, to allow me the ability to build that portfolio out. And I do foresee that joint brokerage account being my largest account someday. I really do. I look at the Roth IRA as being one of those accounts that I just want to keep as high a level of quality as I can in there, a nice diversified mix between the ETFs of my liking. You guys know the $100,000 account has 6 ETFs in it, emerging markets, VYM. Well, I'll just give you them right now. I'll just tell you off of memory. Okay. VYM, which is domestic dividend, and then VYMI, which is international dividend. Okay. Those are the big two. Okay. In the same account, we have VBR, which is the small cap offering. We have VNQ, which is real estate. We have VPU, which is utilities. And finally, we have emerging markets. Okay. Those are the 6 baseline funds that are established in there, all paying dividend, all set up for reinvestment, all working in a manner that I expect them to be working. Added a few blue chip names to the portfolio this week just because, well, because I wanted to. Costco was one that came to my mind that was added into the big portfolio this week. But very defensive in nature with that strategy, and everything set up for dividend reinvestment, and everything is ready to be subject to a downturn in the portfolio. I was asked last week on the collaboration how I deal with a downturn in the market, and I responded really quick. And I said, I don't look at it. If I've done what I need to do as an investor, not necessarily preparing mentally, I would hope that for you guys. Um, with all due respect, I have a lot of experience in the market, and I will absolutely emerge from an eventual downturn in the stock market, whether it be 1 or 2 or 5 in the rest of my life, because um, I know that that's the best way to handle it. But in all reality, when that's going on, it's usually not very healthy to sit there and stare at it. It's usually not that healthy to do that when the market's going up every day either. So, my advice was just that. But what we can do in the meantime is actually prepare our portfolio to give us options. Okay. You always have those funding caps to hold on to. Now, I won't be max funding the first of next year, 2020. I will be max funding one of the accounts just because I felt like that's underperformed a little bit more in 2019. So I will be doing the 6,000 in that account. The remaining 6,000 for the other account, I'm actually going to just hold aside. I may deploy a dollar cost average schedule, which I've gone back and forth on this strategic application a little bit. Some schools of thought would say that you want to have that money in the market right away at the first of the year, and then just, it's dollar cost averaging throughout the years. I typically would agree with that premise. In practice, which is what I've been doing for the last couple years, I don't really think it's worked out as well as I've just explained. Okay. In theory, that works really, really well. Unfortunately, when you're done with the Santa Claus rally, January can typically prove to be a nice sell off month. And if you're making those full investments come January 2nd after the holiday, eager to get your money into work, you could be subjecting a lot of new capital all at once to a downturn. So I would just suggest that you're careful with that application. I'm both schools of thought are good. I think you can win with both strategies. I just am a little bit more I'm digressing a little bit to more of the old school philosophy of injecting, let's say if you're doing a true dollar cost average, go ahead and do the $600 a month. And then deploy that either strategically or on schedule, whatever it is, suits your profile as an investor. But But that I thought that was a really good question, and just to prepare yourself, now, for going into 2020. I don't think there's an investor out there that, um, is immune to taking that level of scrutiny over program, um, their own application, and I really contend to make sure that you're in line with your exposure to the market now and making sure that you can subject those dollars to a nice downturn if we do in fact have it. Make sure you're set up to take advantage of it, okay? Because I'll be the one beating the drum when I feel like those opportunities have emerged, and I really haven't felt that way for the last couple of years. Have I remained invested? Yes. Have I remained investing? Yes, I have. But it's going to be a little bit different application if we do have some of these valuations that Canine 7 is talking about, which have obviously taken a little bit of a leg up, obviously. Um, I think we need to have a good, healthy correction for the market. That's just my opinion. When and how it happens, I'm not here to tell you that. That's anybody who tells you they know when that's going to happen is silly. The best we can do is remain invested, do what we can do to prepare and live to fight another day. So anyway, I cruise down here. The one and only Doug Whitaker, man. It's awesome. Been a couple years since you've been with the channel. And I'm absolutely thankful to have you on the channel as part of the community. It's great to see you. Great to see you this evening. So glad to have you on here. Again, Hidden and Freedom Investing is in here. Certainly want to add them in. Larry Massa and Eric Weber, couple subscribers to the message that have been with me for an awful long time. I think we're probably going to be growing wealth together, and I'm just as happy to stand alongside my subscribers and grow wealth with you guys. I'm honestly not one of those folks that look at finances as being one of those things that you can stand on and use as a judge of character. I just don't believe that. When I say that the investing topic in and of itself is fairly shallow, I mean that. I really do. Now, if you're taking that money and you're doing philanthropy, now you have my attention. Now you're taking money and you're feeding people that can't feed themselves, or you're donating some of it to a cause that is actually helping and rendering real results for people who can't generate those results for themselves. Now you're talking. Now the financial topic moves beyond being a shallow topic, right? Something that we're just looking to wealth build. And the principles that I teach upon are simple, easy. Anybody can do it. And we don't just teach upon them to teach upon them. We don't just teach people to invest just to invest. We teach people to invest to succeed. We give you the best strategic advantage that we can possibly put out there to do just that. But wealth building and wealth creation for you as an individual, or you for your family, or you for your extended family should really be kind of a corralled topic. It really should. Um, and that's why I alluded to what I alluded to at the top of the program. It's really not a measure of a man or a measure of a woman. It's not. It should be something that is put under control. It should be something that you want to do. Hell, a lot of people don't even want to do it. They don't. So they may come onto the independent investor channel and expect me to give them some sort of magic motivation speech to change their desire to invest. I am sorry. I will apologize right up front. That's not going to happen. Okay? If you want to succeed in investing, you can take a little chip off my block. If you don't think that I'm passionate about investing, look in my eyes. Okay? I'm very, very serious about this topic. You're serious about the topic of money, because when people sit across from you and we're talking about we're talking about building wealth, generating wealth organically. Okay. Lots of different ways that we talk about that. The portfolio could be working as it's coming down in value. Okay. That's part of the gig as well. So don't misconstrue the message and saying that 5 years to $100,000 is just a freaking straight line. Okay. I wish more people would talk along these lines of dialogue. I really do, because I do think there's a lot of people out there who are probably ill prepared to take in the totality of responsibility necessary to be a successful investor. And I wish success for everyone. I really do. But money is a very serious topic. And that's typically why I don't come on here and jump around and screw around. I'm very, very aware of the impact that my words could potentially make for somebody who doesn't have a whole lot of experience in the stock market. Be excited, okay? It's okay. It's okay to be excited about discovering a new opportunity for building wealth for yourself. Perhaps maybe you've never thought about yourself as even being a candidate to seek out some wealth because you've justified not becoming a participant based on whatever barrier you've put up for yourself. I don't make enough money. I don't know enough about the stock market. Nobody's there to help me. I've failed at all these other things, so investing is just going to be another thing that I fail at. Okay. Um, I can sit here and tell you that none of those barriers exist because they don't. They don't. And the quicker you can get over those barriers and really find your own empowerment, the better off we'll be. But we absolutely want to deliver a message that is rooted in reality. Okay. We want to be realistic about this because I reflect back on the 5 years of investing, and it was before that too. You guys saw when I started that account, it was as a result of a rollover from Edward Jones, and the portfolio had not moved at all. When I rolled over the 30,000, you guys saw that the starting amount in November of 2014. So I had a little bit of head start. I didn't go from 0 to I went from 30,000 to wherever to 100,000 in 5 years. I didn't generate it from 0. Might as well have. That 0 to 30,000 probably took me way longer than it should have because I was probably going through a lot of the self-deliberation that a lot of other people were going through as well. Am I doing the right thing? Am I going to find success in investing? I don't know. I don't have those validations in place for myself. And it's really hard to have those validations when you first start. And that's where I think a lot of the value on the channel is I can walk you through some of those validations that you kind of need to keep your eyes open for. And once you hit some of those small milestones, the $1,000 invested, that's a big one. $10,000 invested, that's one of the biggest ones in my mind. Um, and I offer those little tidbits for people to really take that time of reflection a little bit. And this was something that came up in the passive income investor video as well, is that he didn't really take time to acknowledge those small milestones. When you met him, 25,000, 50,000, and eventually the $100,000 mark. And I think that was really good. That spoke to me as well. I thought that was real talk, which is typically what I'm trying to glean from a YouTube video. I don't catch a lot of content online, but I thought when he said that, I thought it was really, really smart. I thought there was some really good nuggets in the video. I did a good job with it, kind of talking through the evolution of what he went through in building that wealth. And I thought it was really, really good stuff. But guys, it's great to see you. Thanks for coming on, and thanks for all your long-standing support. And below, I've got Mr. Jared Odell, who I've already said happy Thanksgiving to. Jared Odell has been just a great, great supporter on the Independent Investor channel. A great friend of mine as well. Another one of those folks that I feel like I know personally. I know he would say I don't, but I just think I don't think the community would be the same without you, Jared. I do mean that from the bottom of my heart. So thanks to you for all your support and offering your perspective on investing. I just think that the more investing perspectives we can get collectively, I think of the value that somebody who is new to investing comes on and says, "Hey, what do you think about me starting with the S&P 500?" And that potential investor doesn't get one comment back, they get 8. And they can review those comments and say, "Wow, I really gravitate toward this one," or "Wow, this one gave me something to think about that I didn't think about," or "This one I disagree with." You can really start in on that awareness piece, and you're not hearing it from a jaded perspective, number 1. Number 2, you're not hearing it from a perspective of somebody who's trying to sell you something. And that's the beauty of a Jared Odell or any of those other folks in the group there, Ernest Mikami as well, and Adolfo, Escodibo as well. I really owe those guys a lot because they do it out of the bottom of their heart just to help people, and in turn, that helps me. And in turn, I can say thank you because I just couldn't do it without you guys. I just don't have the time. If I did this full time, maybe I would have more time, but I don't. So that's the way it's going to continue to be. All right. Back to back Gen X now I too. That's awesome. I know Gen X is uh, throwing down on the live stream. I geez Louise, if you were devoted on a Friday night to kick on to a couple of YouTube live streams, man, gosh, you just can't find any better content like that. What a great opportunity to come on and engage, with a couple of folks that obviously have a few years under their belt in investing. I just think that's worth its weight in gold. I really do. Totally different perspective. I sometimes am in awe a little bit when I watch those videos. I haven't kicked on the last couple weeks. I will remedy that certainly. I force myself to go on there because here's what happens. I'll sit there and I'm watching and I'm like, okay, I've got to kick on and run a live stream and I've kind of got to get my mind right. But I just that's pretty cool, that we're running it back to back like that. I'm all about it. Whatever's good for everybody in the community to grow. We're not in a rush. I think he would agree with that. I think perhaps maybe if there's something that he's been able to notice about my channel is that I have not grown as fast as some of the other ones. I really haven't. I've grown very organically, and I think there's something to be said about that. The message has been the same. My approach has been somewhat polished over time. If you go back and watch some of those beginning videos that I've put out, you can see how my message has improved over time, and it will continue to improve because it's super, super important that if somebody comes on that I have the ability to reach, that I reach them. And I know I can't reach everybody, but I want to make sure that if there's potential there to be reached, that I'm realizing that potential. So we'll continue to evolve and, you know, revolve around the topic in a number of different ways. That way, we're reaching as many people as we can, but by explaining the concepts in a lot of different ways. I think that's super important, man. Sorry, that coffee's freaking good. It's good. Anyway, I've got Michael Raver, America, who's ready for college rivalry? Yeah, that'll be fun. Hello, all, and happy Turkey Day. So, Craze 2 fan is in here. I just saw somebody subscribe right before the live stream. I hope they end up kicking their way on here. I really enjoy the people who come on and it's their first time. Those are always a fun opportunity. Um, we got John Henderson in the group. Evening, Ryan, and everyone. Appreciate you popping on here, man. Hello, all. I'm thankful for the community and the fact that I'm not vegetarian. Yeah, yeah, no doubt about that. I'm kind of out of luck for Thanksgiving with that going on. I'll be visiting the Big Apple next weekend. I'm trying to get a pick with the Big Bull. Yeah, you got to be insistent. It'll probably be, I think you'd be okay. Usually in the summertime, it's insane. You've got to push your way up there. But I think in the winter time, I think you'd be fine to get in there and get your picture. People are usually pretty courteous. unless it's summertime, and then it's really difficult. Man, there's like 10 feet of just people standing around all trying to take there's no line. So like you just gotta force your way up there to the head of the bull. You could always get your you could if you want your picture with the front of the bull, it's super super easy. But if you want your picture with the back of the bull, that's even easier. So just keep that in mind. If you want to do one of these, certainly there's usually never anybody at the ass of the bull. So just some words of advice there for sure. I know, I know Doug Whitaker's falling off of his chair because I'm such a funny freaking guy. I get it. I understand, man. Don't worry about it. Just get back up and crawl back on the couch, brother. All right. Wait for my next joke. I got Greg Cammy in the group. Hello, everyone. Hope everyone is enjoying their weekend. I'm not only enjoying my weekend, I'm enjoying my week. It's been quite nice. Some really good, well-deserved time off. I feel like I'm caught up on my projects. Really good stuff. Um, Making those New Year's resolutions too, guys, for next year. 2020 ought to be interesting. But definitely be thankful for 2019. It's been a heck of a year this year. Another 20% return in the S&P. You know, you can't scoff at that. You'd like it to be that way every year, but we know that that's not reality. But be cautious about our approach at this point in the investing game for sure. Not sure about everyone else, but haven't bought much the last few weeks. So Jared Odell offers a comment there. Um, I've really been engaged in a lot of different trading activity, I guess, over the last couple years, looking to generate every opportunity I can, and I've accelerated the wealth quite nicely for myself. It becomes a little less scalable to deploy those techniques and trading into the market and doing the swing trading activity that I do. Little less. I swing trade with quality companies. I don't take obnoxious risk with stupid stock as crap companies. I usually do even my swing trading with good quality companies, blue chip dividend payers, growth companies that I feel really have nice momentum behind them. Made a fortune this year with CRM. Some of the other momentum names, couple I haven't played very well. Facebook, I've done quite well with. Google, I've done quite well. Just to give you some examples of some of the swing trading activity. But yeah, I have been doing some buying over the last couple weeks. I wouldn't say that I've been holding off on the market per se for waiting for a severe downturn in the market. What I will say is this: I've prepared the portfolio in such a manner. I've added some names in there, taken some of the good, well-earned profit and taken some new starting positions in some companies that I've wanted to own. TJ Maxx and Ross Stores, both of them. Split them up in the portfolios. TJX went in one and ROST went in the other. So went ahead and put those two fine retailers in there. Went ahead and picked up what were some of the other good names that I picked up. I'll think about them as I go. I did take VTI out of the one portfolio. I took profit in it and then rebought it in the joint account. That will give me the ability to strategically buy down that ETF when the market does retract. And I want to have the ability to strategically buy that down as often and with as much as I want. So, for you guys that just heard what I said, I took the VTI out of my Roth IRA 2, sold it for profit, all tax protected. Okay. Pretty good profit, I might add. It was up 8 or 9% or so. Nothing to scoff at. Put that in the joint account, substituted VOO into that account. It was something that my wife did not have exposure to. I sold VOO in my account, took profit, of course, reestablished a new position, a starting position, I might add, in my wife's account. That way I can have the ability to buy down that ETF in that Roth. And I did not need the S&P 500 in mine because I already have exposure to it in my thrift savings plan. So that's why I bought the VYM, the VYMI, the VBR in mine, as well as real estate, utilities, and emerging markets in mine. So a little bit more holistic approach to mine, added that Nice product. I like the VYM product. It's a good dividend payer. VIG. I know Jared Odell is a fan of VIG, which is another good product. But that rounded out that portfolio and allowed me to take the VEA out of that account and put that as well in the joint. So now I've got VTI and VEA. So total market, VTI, and VEA. Those are the two equities ETFs in basically what was the fixed income portfolio. So we've rounded that out a little bit, and it'll give me those barometers that I want so often, to start to strategically buy those. Market didn't go down enough today to justify rushing into the market in any capacity. But what I will do is I'll monitor those ETFs as we go into 2020, and we'll look to strategically add little bits at a time and really introduce. I do foresee that account, the joint account, being the largest account in my overall collection of buckets. That will be the largest. Down the road, I will introduce some single stock into that account as well, because I'm really, really satisfied with the level of quality that I have in the two Roths at this point, being subject to 26 out of the 30 Dow components and some other stuff that I'm very happy with having in those accounts, really with an emphasis on dividend income, with an emphasis on owning diversified ETF products. So just looking to build out that joint bucket that I have. So those are some of the strategic moves that I made in the portfolio. For those of you who could actually stay with me, I explained it as slowly and as methodically as I could, but I know there was a lot of moving parts there, but there was a lot of justification for me doing what it is that I did. And it was all defensive in nature. It was all to prepare the portfolios, the Roths, to put them on lockdown and really open up the opportunity in the joint account to really take advantage of a downturn when, in fact, it does happen, if it happens. If it doesn't happen, no big deal. I still have the option there to go ahead and build that nice passive position in the VTI, in the total stock market index. So that's my strategic plan, and that's what we're going to be doing. I'm glad to share it with you guys. So we are still within the first hour. I can't believe it. It's been really a lot of fun so far. But I do want to talk about some of the things that I am thankful for in investing. This will be a review for some of you folks. If there is, in fact, one investor out there that hears this message and benefits from it, then it'll all be worth it. Okay. The first thing that I would like to say that I'm thankful for is dividends. And when I started doing YouTube, there wasn't quite the level of emphasis on dividend growth investing than there is now. With guys like Jeremy with the financial education channel, and some of the other folks, Beat the Bush, and some of the other guys. I forget the young kid's name. A Chapel, I believe, was his name, right? Yeah, those are some of the very few, and I was in that group. I was in that original group of folks that started on YouTube. But some of the folks that have emerged now have really, really provided a whole different degree of education on dividend growth investing. Certainly, Gen X dividend investor, he's in the group tonight supporting the message. Absolutely. Probably top on my list. Close behind Gen X dividend investor is Joe Carlson. I know PPC Ian does a good job too of bringing awareness to the topic. And I just think the beneficiaries of tuning into those messages are the individual investors, to say, hold on a second, you mean I can take these good quality assets and jam them into my self-directed Roth IRA account, and they can pay me for the rest of my life and compound upon themselves? Yeah, it's good. It's something to be thankful for, right? So dividends is number one on my list. Okay. The opportunity to dividend reinvest is a good one. only made possible in the designated self-directed account that I talk about all the time. Be careful because it can be one of those things that you get charged for in a managed account. Okay. The next thing is blue chips. The blue chip companies, and people ask me all the time, where's a good place to look in the stock market? And I think if they're asking me that question, either one of two things have happened. Either it's number one, a very genuine question, and they want to know something other than a smart ass answer that I'm probably going to give them. But here's the thing: if you're honestly asking me that question and you haven't done any diligence in discovering the Dow 30, combing over the S&P 500, looking at some of those products that are available out there, whether it be an ETF or an index fund. I mean, Christ, guys, I hate the response. Just Google it. But we really don't have the excuse not to have any answers to any question that we might have with regard to the products out there. And we make available through awareness all of the products. I mean, I talk as if it's a testimonial. The reason I do that is because I can't come on the channel and say invest in this, this, and this. It doesn't work that way. Okay. Um, I'm an individual, independent investor. Okay. And by telling you how I seek my exposure in the market, you guys can look at the channel as a testimonial and say, wow, Ryan mentioned this VTI product. This is pretty awesome. Where can I find something like that? And that's where I would point you to the Vanguard's website and looking at their ETF listing. Where can I find information on the Dow 30? Well, if you Google it, you're going to find 100 links that are going to provide you some sort of clarity on what those blue chips look like. In the Dow component, obviously, it doesn't need to be the central focus of your investing psychology or approach when you start, but you got to start somewhere. And I think for a lot of people, at least for me, when I started investing, I really didn't connect good companies like Verizon or Apple Computers or Home Depot as being viable investments. I really didn't. I just thought that these were just phenomenal businesses. And it wasn't until I came full circle to say, no, hold on a second, I can actually become a participant in some of these great companies out there that exist. And I think the idea is to put some of these great companies in some of the accounts that we're going to talk about and allow them to grow, sprout roots for you, grow big, and produce fruit down the line. Okay. Which is one of the biggest, best kept secrets in the investing world, that you don't have to outsmart the market. You really don't. Put these good quality assets in a good retirement account for yourself and be done with it. All right. Don't lose sleep over this thing. Becoming a participant in the market is not rocket science. Okay. Nor does it make you any more or less special in life. It just makes you awoke. It just means you're not a non-investor anymore. Congratulations. That's all it means. Okay. And it's exciting stuff. All right. The next thing, my community. My community provides me with a ton of awareness, things that I would have never known had I not started the Independent Investor channel. So for that, I am humbly thankful. I hope I'm providing enough psychology, philosophy, whatever you want to call it, strategic approach to the market that can be utilized. I know introducing self directed investing is good enough because I don't think there's enough people who really have enough understanding about the topic to deem it a topic that needs to be talked about in and of itself. I really do look to distinguish between the two options that are available out there. Either you go and seek representation or you can do it on your own. And the secret is to understand the benefits and the drawbacks of both. Okay, that's the key. What do we render out of that deliberation? Well, we render an investor that is more informed. And that way, a more informed decision is going to set you up so much better later on in life because You run the risk of making a decision, an ill-informed decision, and putting things in motion that later on down the line, you can look back on your life and go, "Holy crap, why didn't I know about that? That's legit. Why was I so unlucky not to be introduced to that?" And I think for a lot of people, that's what this message could and should mean to them. Okay? It's really that powerful. But I think it's a two-way road, and for that, my community is very, very important to me. That's why I look at the growth of the channel in relative terms, and I think the strength of the base, I just couldn't ask for a better community. Folks that I've met in this community wouldn't trade them for nothing, and I'm really glad to be the leader of this particular group. And also an advocate of bringing people together, holistically across other communities as well. All right. The next one is exchange traded funds. Now, a lot of people might say, well, that's interesting, Ryan. Yes, yes, it is. Because when I started investing, ETFs may have existed, but nobody sent me smoke signals out in the country to let me in on this nice little secret. But what a great way to seek your exposure from a diversified perspective, make that dividend investment, seek out your diversified exposure in a lot of different manners, whether it be international, domestic, large cap, small cap, medium cap, sector specific ETFs. Guys, that portfolio is up 12%. So Jared, let Adolfo know. I this experiment is kind of working out. He's going to throw a tomato at me. That's totally fine. But hey, 12%, that's real returns. Again, this is not monopoly. In the sector specialty ETFs, I've got it weighted to technology and it's up like 28%. So it's on fire. It pulls up the entire portfolio, but think about all the cool options you have to seek out your exposure, in a diversified manner that's going to pay you a dividend. I just didn't have those options when I started, guys. And it's definitely worth noting how important that diversified exposure at such a low expense ratio at such a low expense ratio. It's worth repeating that because usually people hear the front end of it and they're like, wow, diversification, that's fantastic. It pays a dividend. That's awesome. No, the real holistic takeaway is such that you can seek that exposure at such a low expense. The next lowest expense that you can actually seek out is zero by just buying either no cost ETFs or the actual underlying stock itself, which of course doesn't cost you any money on the expense side of the house. So definitely worth noting. Um, Dollar cost average is another one of those things that I think a lot of new investors really can't or don't or just put on the shelf appreciate in terms of injecting money over the long term, no matter what the market does. I give my strategic twist on dollar cost averaging in that I do pay enough attention. And again, however I've been able to render results, those results are in the books. They're done, right? But you guys know how I've been able to deploy capital in the stock market over the last 25 years plus of investing, by looking to really take advantage of those that fear in the market. um, the worse the fear, like today was a nothing. I was down $800 in the portfolio today. Today was not big enough for me to even pay much of attention to it. I went to Target and shopped for some sporting goods and some toys, but not enough really to get my attention. But I pay enough attention to say, you know what, this might be an opportunity. So do I deploy a true dollar cost average schedule? No, I don't. But for somebody who wants to be really hands off, there's absolutely benefits to picking multiple injection points along your strategic plan going forward and injecting that money no matter what the market does. I just contend that putting that money to work when the market is a little more recessed instead of what K97 being a little bit elevated. I just think it's a strategic opportunity for investors who at least pay a little bit of attention to the market. It doesn't take the sharpest tool in the shed just to pay a little bit of attention and say, you know what, I've had this money on the side in my dollar cost average program. I'm going to go ahead and pick my injection point here, as opposed to just blindly setting it up on the 16th of every month or setting it up blindly to do biweekly, whatever. And that's fine too. That's totally fine too. I think over the long term, I think you'll find that that'll work for you as well. But I think dollar cost averaging is absolutely one of those things that if you're a new investor, it's a term that you really need to come to know, come to appreciate, study it a little bit, understand what the value of it is, understanding why you do it over the long term and what it could mean for your portfolio's performance going forward. Dollar cost average, one of those things that I'm very thankful for. All right. Um, Free trades. Okay, so 2019 was the year of the free trades. Last year was the year of the discount broker. So I had to really frantically provide my subscriber base with an opportunity, that opportunity coming through First Trade and M1 Finance. I've really held off on the Webull opportunity. I'm probably leaving some affiliate commission on the table. I really haven't come to a decision yet whether or not I'm going to introduce that as a third option, but my heart says not to. And here's why. Most of the major discount brokerages, if they haven't done so already, worth talking about, have already moved to zero trading fees. So it becomes less attractive to go with a company like Robinhood or even M1 Finance. And again, I get it. I'm going to have tomatoes coming through my computer at me. I love M1 Finance, Ryan. Leave it alone. Just saying, okay? Just saying it might not be as necessary for you to seek out your exposure, and differentiate between a discount broker and a full service broker, which I do. I absolutely put a difference between those two programs, but to each his own. There's people who invest in M1 Finance that love the account. I have one, and I think they're great. Okay, it makes investing fun. But when you're talking about the real specific details, for example, Robinhood not offering retirement accounts, not offering um, partial share purchases, those types of decisions can be deliberated upon and acted upon, and you really can choose what is going to be aesthetically beneficial for you as an investor. But free trades, I sit back and I love watching the industry squirm. If there was nothing that I was looking to do when I started the Independent Investor channel, and that was to make a ripple, seriously. Yeah, I mean, they were getting wealthy for not a whole lot. And a lot of my motivation was to speak out against that. And good for YouTube for allowing a person like me with a platform to say my piece. Because usually people like me didn't have the opportunity to speak out. We would have just exercised our right to become a self directed investor and benefited for us. I would just like to grab and take as many people along with me on this journey as I possibly can. Why? Because we can. That's it. Okay. All right. The next is the Roth IRA. Obviously, one of those benefits for anybody that makes less than $130,000 per year is worth looking at as one of the primary options to sock away money. If you're rubbing nickels together and you're that investor that passive income investor was talking about during his video, said he never made more than 40,000 a year. I think it's important actually to realize that that might be the only account that you ever have in your life. So I think that's super important to realize the importance of those benefits there, and to start to realize back some of your benefit that's been provided to you to tax protect money. All right. The self-directed designation that can go over the top of, that's one of the things that liberated my investing career, liberated it. I was going through years where the S&P 500 was up huge. having really, really good years, and I would get my statement back at the end of the year, and I was in the negative. Why? It's because I learned a lot about cost basis. And then I was like, well, okay, how can we improve upon or eliminate that effect over a particular asset that would make it necessary for me to look at the year over year performance, but then look at the cost basis and see that amount significantly go down. If not, I didn't even make any money. Like, what's the point? I'm taking all the risk to make somebody else money. Okay. So when I was turned on to self-directed investing, it just clicked and it just made sense for me. And that's what we're trying to do for you guys, is make it make sense for you the best that we can. Um, and I believe we're doing that. I really do. Compound interest. That's another thing we offer through the Trading Academy as well, for folks to go on there. The benefit of compounding interest. Now, it doesn't really do a whole lot of good to acknowledge the power of compounding interest only to subject your money to fees and restrictions within the account, because that's going to drastically prohibit your money's ability to compound over time. And that's typically what we talk about. But compounding interest in and of itself is a phenomenon that is very important for you to understand, but more so understand how we want to protect the phenomenon of compounding within the account that we build for ourselves. Okay, that's the real key takeaway. All right. The next is tax protection and wealth preservation. Okay, so this is one of those things that I've always insisted upon on the channel. The tax protection you're going to get in any Roth IRA account, but the wealth preservation piece is, again, comes back to my point of working so hard to put those good quality assets in there, and they're going to perform how they're going to perform. Okay. The idea is that they're going to perform how they're going to perform, and you're going to either realize or not realize whatever potential is going to come out of that asset fully. What I mean by that is, if we do enter into a bear market or an eventual recession, the self-directed investors are going to have the upper hand during any market downturn. There are going to be portfolio managers trying to babysit their clients because they have not provided them the proper risk allocation, number one, nor have they done the proper risk analysis on their clients to understand what level of risk that they were tolerant to. So they're going to spend most of their time babysitting those clients and talking them through. All they need to do is hold, and all they're going to want to do is sell. Sell. I can't lose everything. I got to sell it all. Self-directed investing allows you the opportunity to have the upper hand. What I mean by that is, if your portfolio is solid, you can know that it's solid in an up market. You can also know that it's solid in a down market, because you're not sharing any of the portfolio's performance or lack of performance with anybody. You render the results 100%, whether it be on the upside or the downside. There's nobody in a recessed market that is sharing in your pain. Okay. The irony in that is, during a downturn, Edward Jones, Citigroup, and all these money managers, they're all making money. Okay. They're all making money on the backs of accounts that are taking all of the risk. And all they have to do is try to sweet talk you in remaining strong in the market. Why? Because if you sell out, that's assets under management that are leaving the firm. Okay. They train on this stuff, guys. Okay. All right. Goals. I'm thankful for goals. That's what helps you stay grounded. And goals are a little bit more long term for me, I think. Uh, where I see myself later on in life, um, um, pursuing some level of financial security into my future. That's big. And then the plan. aspect is kind of the day-to-day application. How it is that I'm gonna do up a plan that's gonna keep me on track toward my goals. And I've just recently come to this realization that I've done way too much, activity in my account, to put it lightly, okay? So, I'm always self-assessing my ability and my performance in the market, and that's the realization that I've come to, and I really want to become a lot more of a passive investor. It's just what I wanna do, okay? And I think what's gonna help me in that goal is to actually write down a plan for the first time in my entire life. So that's one of my resolutions for 2020, is to actually write some of this stuff down, because I think when I'm making decisions on the short term to take some trading profit, I think I would like to do that less. Because in certain circumstances, yes, I've taken really good profits and I've timed it really, really well. Sometimes the stock goes down, sometimes it continues up. I think I could save myself a lot of deliberation by just entering into the companies that I know are solid and companies that I want to invest in, and just holding them indefinitely. I think we talk way, way too often when we start investing on getting involved in an asset with the eventual opportunity to sell and take profits. And I think that's extremely short-sighted. I really do. And I'm the first one to be guilty of this. Good on me, because I come onto a social media platform and I admit my shortcomings to thousands of people. But I've got tough skin. And I think my criticism of myself is right on. I really do. And I think if there's something that you guys could maybe benefit from in my offering of this constructive criticism and desire to somewhat evolve in my approach to this gig, is that I will be drawing up a plan absolutely to help me remain grounded during times in volatility, and understanding really why I'm doing this gig. I'm really not doing it for the money short term. I never got involved with investing to make 5% and then sell it. I never did that. I'm investing for the long term. But sometimes you make those short-term decisions because you see that profit and you wanna render it, you wanna take that profit, and I've leveraged those profits very, very well, don't get me wrong, okay? That trading profit has, eh, generated a lot of capital within the accounts, that of which I've turned back into a lot of nice positions in a lot of nice companies. That's fine. But I think I'm just at an impasse in my life where I'd really like to hit the skids a little bit, put my accounts on moratorium and not pay too much attention to them. That's what I'd like. All right, back to the comments. Awesome stuff. I wanna make sure that I've got Phenom 1 who's just gives the kindest comments. My goodness. I just feel good every time I read one of the comments. I haven't read it yet, but I know it's gonna be a good one, okay? I love the whole community here. There's a great feeling of unity here. Thank you for bless all of us. Bless you for sharing your wisdom with us. Um, I'm just another fellow roaming the earth. You know, nothing special. Uh, for our teachers out there and our doctors and our construction workers and truck drivers and fishermen and all the folks providing their own little contribution to society, my hat goes off to all of them. Like I said at the beginning, I wasn't really that good of a guitar player, so I've always just had an affinity for stock and finances, and the prospect of it, and it makes me, and I hope it makes all of you, feel somewhat good when you are able to realize some of the success in investing that I've experienced. And I think you can experience your success. Success is, it transcends the community. But I know we're experiencing our success levels in a lot of different ways, and that's good, right? No portfolio needs to be the same, and it isn't. However, it doesn't mean that some portfolios aren't going to more than outperform mine, for example. Some may underperform a little bit. But if you're up 20% for the year, or you're up 10% of the year, or you're up 40% for the year, I look at each and every one of those as potentially being justifiable successes in the stock market. Okay. Would you have made that 10% had you left that in the savings account for the year? I think not. Right. Um, so yeah, I think the more we can get over, I really appreciate the comment. I really do. But let's be real. I'm not a financial planner, not a stock analyzer either. I think some of the best stock analysis that comes through YouTube by far and away is Gen X Dividend Investor. By far. I don't think there's anybody close to. I don't. Uh, I think there's a lot of people who come on and probably cause more damage in their message than positive. Getting people excited about the stock market is just something that makes me cringe. It just pisses me off, to be honest with you, because those people will not have the preparation necessary to subject their money to a downturn and to see it through. I know they talk a big game. They do. I'm going to wait until the stock market goes down and I'm just going to load up. Okay, good luck in that plan. If you've been investing for anything longer than 10 years in the market, you will come to the staunch realization that you will never, ever, ever be able to do that. And new investors get involved. The worst ones are investors that are new to the market, and I mean new within 10 years. And they think that because they've rendered a little bit of success out of the last few years of the market, that somehow they are now a stock god or a stock guru, or somehow have some level of insight and artificial intelligence that provides them the necessary credentials to come onto YouTube and talk to a new group of new sheep, I mean, investors that are easily influenced by the prospect of making a quick dollar. Okay. And you guys know, you get involved in the stock market and you invest in good quality companies. Hell, you could invest in garbage. You can still make money. Okay. But I definitely think there's a perspective about responsible wealth building that really needs to be discussed, especially with new investors. I really do think that there's a lot of intangibles that new investors need to understand before they get excited about the stock market. Okay. It is what it is. Okay. Get excited about something else. Okay. Making money is great. It validates why it is we in fact invest. But is it something that you need to jump up and down about and come on and make YouTube videos and let people know that you're up 12% on a particular stock because you decided to take the chance of investing in it? I just take a little bit different approach to the market. Quite frankly, I think that's what a lot of people should tune into my message to get that level of perspective, because I think the majority of those perspectives across the YouTube landscaping, and I don't mean to impugn other channels, I don't, but I think there's a lot of activity out there that is very self-serving, and that self-serving approach to the market is benefiting those individuals, no doubt about it, at the expense of a lot of people. A lot. Okay. All right. Some of those folks, they make their way onto my channel and they're like, wow, this guy's boring. Yep, boring, but right. All right. Good stuff, man. Great community, no doubt. Mr. Bob Wright says, got Riley Griffith in the house here. I'm not sure if I gave Riley the proper shout out. I'll probably make a note and get him quicker at the top of the live stream. I do apologize for that, man. Getting to the end of the live stream anyway. It's been a really good one. It's been a lot of fun tonight, but I'll remember you for next week. Next week will be nice round number, nice, interesting live stream 75. I think that'll be a lot of fun. We're almost to 100 live streams. I can't believe that. We'll be hitting it next year. Pretty awesome. This has been a lot of fun, a great project, one that I just went with my heart on. I really did. My wife was just commenting the other night and saying, when you first started the live streams, it was like an hour, and it just kind of morphed into something that has turned into something that's been 2 hours. And I said, "It just feels right." That the timing of it just feels right, because I just don't think an hour is long enough to engage with my community, get off my chest what I need to with regard to what's going on in the market, make my proper shout outs, grow the community, give proper acknowledgement, and offer the opportunity for new folks to come in, and throw their direct questions at me, because I know there's a lot of people who expect a long answer on the comments. The comments on the videos are becoming overwhelming. They really are. I'm just being real. I spend a lot of time with just I feel like inadequate responses to people, because there's a lot of really good questions that come through the channel. This is your opportunity to come on and talk to me directly. And there's not a whole lot more I can do but provide this opportunity. Even if you just wanted to stop by, drop the question in the top of the live stream, leave the live stream, and then catch it on a replay. Because if I see those legitimate questions pop in, I absolutely will take a few moments to just vocalize my answer to you. Okay. I've got the Irish Trucker. That's probably the coolest screen name I've ever seen come through the channel. I've seen some good ones too. I view 4 or 5 channels on a regular basis. You seem to be pretty honest and knowledgeable of what you are talking about. So knowledgeable, interesting. Um, the the topic of finances requires a lot more discipline than it does being the sharpest analyst in the shed. Okay. What I mean by that is you can really overthink this thing really easy. And I don't spend my profession. My profession has nothing to do with this project and investing. Um, I think a lot of my knowledge comes from a deep-rooted understanding of discipline. I really do. I render a lot of my success in not only life, but let's just say for a second, finances, because I do have a pretty healthy net worth, that of which I've built on my own. I've been given nothing. If you want to call that knowledge about the stock market or knowledge about the topic, I would say it's more of the latter. It's more of a holistic type of mentality about curbing spending. I don't really enjoy spending money on stupid things. I really don't. I don't. Um, I allow myself a couple things to buy without deliberation. Let me give you an example. Gas. Gas for my truck. When I pull into the gas station and I put gas into my Tacoma, I, I don't I don't beat myself up over that. Okay. I get points through my credit card for making that purchase. And without gas, my truck is not going to run. Okay. And I won't be buying the new Tesla. Okay. Because I know I'm the only one in the universe who feels this way, but it's ugly as sin. Okay. It's ugly as sin. Guys, come on. Please pull your head out of the sand for just a second and agree with me. It's ridiculous. So I don't beat myself up over that, but I find it interesting. So everybody's now a minimalist online. I find that interesting. Uh, I would really be interested to know if they're really willing to practice what they preach. Okay. And don't get me wrong, guys, I'm very well blessed, but I would just assume buy stuff for my children that I would myself. I don't get a whole lot of value in that type of stuff. I have wants and dreams and desires, and it surrounds having a piece of property someday, right? I um, I would really like to have the opportunity to build a house someday. Okay. But buying little frivolous things now is really not going to help me in my mission. And if you guys have tuned into me long enough and understand how serious I am about my mission, I don't just talk the talk. I do, in fact, walk the walk. So I think that may be something that you can take away from my message. I really appreciate that comment. That's pretty awesome. I think you're right. I think there's about 4 or 5 channels that are really, really top notch. I would go so far as to say that I'm not one of them. There's some really good stuff out there. I think there's definitely some takeaways to tuning into the independent investor channel. I do think there's a lot of people who can relate with my ability to talk to people and not at them or especially down to them. Okay. Uh, my approach is absolutely not to do that. And I do get some sense of that from some other creators. And it goes back to my insistence that I think they're putting money on a different level or a different perspective and what it means to them uh, out there to people. Okay. And I think in most cases it should mean less. I really do. Again, if you're doing great things and you're feeding the needy, which there are people in this country who don't have food, okay, then who do you think you are going on to a YouTube community and saying, "Hey, look at me, I'm something special because I have money"? No, you'll hear no such rejoice from me, none. Okay, you will give no credit. I'd like to know who you are as an individual. Okay. If you can prove to me you bring something to the table that's special in that category, then we'll talk. Okay. But until then, okay, the money topic does not need to be the forefront of building yourself up and coming off as if you have credibility. Because in my mind, you don't. You may, you may have it, but you haven't proven it to me. Okay. It's good stuff. I really appreciate the comment, though. It's good. I thought today was Wednesday. Glad it's Friday. Kind of feels like Wednesday. It's been interesting. I'm now 70% in cash, heavily allocated in the gold mining stocks. Um, it's an interesting way, Maiko, to seek your exposure there. I would. I'm not really sure if I understand the philosophy of gold mining stocks. I think it's an interesting way to seek exposure to precious metals. I really do. I'm not a big fan of precious metals IRAs either. They just cost way too much to own. So eliminate that option. Next best thing is to buy a really, really nice, big safe or think of something creatively to provide yourself the opportunity to safeguard precious metals, both the silver and gold denominations in multiple denominations, whether it be junk silver, silver bar, silver bullion, collectible coins. Same thing on the gold side of the house, but there is no junk gold. But and find a way to strategically safeguard the actual metal itself. And that's the real drawback to owning precious metals. I'm a big fan. I'm very much drawn. That's the most deficient part of my portfolio that I'm most interested in. But I hesitate in making the leap into precious metals just for lack of education on the topic. And I'm pretty educated, but I don't feel like I'm quite at the level I need to be at to devote a nice big portion of the portfolio to precious metals. And I would aim for 5% of the portfolio at this particular time. I think that's an interesting way of seeking out exposure. Not saying it's right or wrong. I just, again, I don't ever consider precious metals to be an investment. I look at it as a hedge. Here's the thing. I'm trying to change my philosophy in buying stock forever. Gold and silver should absolutely be a generational purchase. You should never, ever be looking to buy and sell gold and silver. What for? You need to reevaluate your gold for that hedge and why you're going through and subjecting yourself to the responsibility that you have to safeguard that specific metal. Okay. And I just, with the amount of traveling that I do and the amount of uncertainty that I have in where I domicile, that's the main reason why I have not ventured into an avenue of the portfolio that I feel is very, very important and one that I would love to build up someday, and I will. But right now, it doesn't make a whole lot of sense to me. And with that said, I do actually feel like it's a very, very good time right now to get some exposure, especially to silver. Okay. Very, very good time with the market where it's at. Now's a pretty good time to start hedging. Okay. But I just have never, ever considered precious metals to be an investment. I look at precious metals to be a completely different avenue of the portfolio. Okay. And what I expect out of that and what value I expect to get out of placing some of my dollars into that form of money. Okay. It was really good. Thank you for allowing me the opportunity. Tim Teller says, Lydia, you did a great job with the collaboration. I thought so too. I was really proud of the product. I really thought that was great. And I said, as long as it has the opportunity to reach people, I'm all about it. If somebody was able to watch the product after we turned it out, and provide some real value for people, then I'm all about it. I was really satisfied with that. It was really a lot of fun, a lot of fun. I watched it after it was done, and I was entertained, and I was on it. So go figure. 500K would get me fired with my living cost. 500K would get me fired with my low living cost. Okay. AD tanks, it's in the US, yes. You looked amazing. You didn't need fancy lighting. I know. Well, I've got 1, 2, 3, 4. I've got 5 lights around me right now. It's amazing what it takes to get this level of illumination. You would notice it, I think. But I agree with you. I never had this. I just got the new ones this year. So just another thing I'm thankful for in the channel, to those small improvements. If you don't hear my voice coming through podcast quality right now, it's I've got my new mic. So again, making those small improvements to the channel. That's just I do that for you guys. I really do. I think with the increase in income, certainly the idea for me is to offset some of that income with some business expense, obviously. So it helps me as well, not only grow the business, but offset some of that um, non-taxable income that I'm earning anyway. Anything less than 6,000 isn't going to get reported anyway. You still have an obligation to report it, which I do, but I think we're up probably 140, 150% over last year. So from a business perspective, the owner's happy. I'm good. And we're making a difference for people. So really good stuff. Wow, that's cheap. Great job on my investment journey. You brightened up the video. You don't need lighting. I just looked at my expenses and I'm at 30,000. I have zero fat in there too. Good stuff. When one realizes one doesn't need things, one can save a lot of money and experience life more wholly. Yeah, so that's probably one of the best comments I've read so far in the thread. I really appreciate that. That's pretty legit. I really do. I'm thankful for the journey I've been on to teach me that level of appreciation. Yeah. Yeah, I think that's what it kinda comes down to. I really appreciate you saying that, because all the time, we always just talk about, "Hey, start this account, build in these assets, and then render success." And it's just so much more than that. You can really accelerate your, prospects for success if you can keep some level of perspective over this investment journey for yourself. Just keep that perspective, because that really is what it's gonna define how large or how controlled this aspect of your life can be, okay? It really does drive. I'm not kidding you. The gasoline story I just told you guys tonight, that's real talk, man. That's real talk. I went to Target tonight and, we had a few things in the basket, and then we took them out and we put them on the shelf, and we bought, like, one thing. We bought the game of life because That's what I used to play when I was a kid, and I wanna play it with my kid, okay? That's a justifiable purchase. Um, nah, we have some fun too, but yeah, you're so right. Everything that we're able to provide for ourselves is in fact a blessing, and I think that's worth stating. I definitely think it's worth it on a Thanksgiving weekend live stream. I really appreciate you offering it and allowing me to comment on that. That was really cool. Thank you. 600 square foot apartment. How about a folks hole? Okay. Your host, Ryan, the Independent Investor Channel, used to live in a folks hole with four other grown adults. Okay. And it was probably, I don't know, 150 square feet tall, man. Appreciation. Everything since that is absolutely appreciated in my perspective. So Tool is a band I'm a fan of. Awesome. That is low. Hello, ladies and gentlemen. Again, Minds in Motion. Minds in Motion sounds like a channel creator, and I don't want to misspeak on the live stream. If you are, welcome. Definitely. We'll get some replays on this and kick over and support you, but I'll have to click into your message. I'm sorry, it's deep in the thread here on the live stream. But I like that. That sounds like a channel. Minds in Motion, really cool. But welcome to you. Thanks for popping into the live stream this evening. It's awesome. I hope you get some financial peace. It sounds like maybe a musical YouTube channel or something pretty cool like that. Um, Definitely not my area of expertise. My genre is finance and building independent wealth for people, but thanks for kicking on anyway. That's great. Ryan Giffen, my bills are too high. But when you have a family, what that kind of happens. Yeah, I don't know. I had a lot of people tell me, "Oh, yeah, kids you take all your money. You can either have kids or have success." And I typically don't buy into that. You know, I think it's changed me for the better. And I don't know. You tend to change your priorities, I guess, the older that you get, and you tend to live through other people anyway. Yeah, but that's interesting. Yeah, you got to get those bills under control. I don't know. You probably like the truck. I see Ryan Giffen. I'd like to know if Ryan Giffen likes the Tesla truck. I don't know. Maybe we'll do a collaboration together. I still need to arrange my next collaboration. I do enjoy those. Eventually, I'd like to provide the opportunity to everybody. Again, I'll extend the olive branch at minute 46 in the live stream because I know there's nothing but diehards in here now. So I know there's not going to be anybody that have like maybe four subscribers. I don't know if you're a good channel and you've got four subscribers. That's and you're in here and you're one of those diehards, then I'll extend it to you too. But certainly hit me up if you're interested in that. We'll line it up. Now I feel confident having worked through it last week on some of the logistics. Very simple, and I enjoy the cross dialogue that's produced out of a collaboration. It's significantly different than a live stream can provide because you've got multiple peoples to bounce ideas off of, and I think collaboratively, I think you get to a better place. I really do, and I think that's part of the magic behind it. I really do. All right, so there's my olive branch for tonight. Okay. Good stuff. Unless that was Enrico Suave. I'm in Denver. Nice. He's back home again. Hidden Freedom Investing. He's probably home with the family anyway. So Minds in Motion says, "Hey Ryan, I appreciate you popping in again. I really try to data log those folks that come in, and I don't recognize right off the cuff. But again, if you are a channel creator, you get your shot out for sure. Just kick in toward the top of the live stream when I start at 9 o'clock Eastern time, and I'll get you that shot out ahead of time. But I'll do a little better work on my end and check out your channel after I go off of the live stream tonight. Okay. I'm paying here to get kicked out. I don't know about you, but I'm ready for a sale. Nice. Cost of living here in Indy is very low. So Ron D, that's awesome to know that stuff. I wish we spoke a little bit more about that topic, about cost of living and certain areas of the US being a little bit more conducive to saving and a little bit easier to actually just live. I've lived in New York City, and I don't know how those people survive. I asked the question one time to somebody who had been there their whole life, and the answer I got was, "Do things illegally." So, I was like, "Wow, that's great. That's great. You live in an area where you have to resort to that type of activity to survive. That's sick. That's lovely." But yeah, as I just didn't get it. So, but I don't know. It's interesting the comparison that I've had to places like New York City as opposed to Houston, Texas, which costs nothing. You you can live down there for relatively little money. It's very intriguing. You can actually have a pretty nice house and um, pretty nice support, roads, infrastructure, etcetera. Those things are pretty good. Cost of living was super low. We enjoyed our time down there in Texas. Detroit was pretty good too. Michigan was awesome. So those are the spots I've been, and now I'm posted up here in Virginia, and Virginia's pretty good, pretty good. The housing is a little bit elevated in my opinion, but we're doing okay enough to where we can continue to support the investing and the saving schedule, which is good enough for me. Okay, I'm not being consumed by any means. Um, all right, you guys are talking amongst yourself. Here's looking forward to all these, and will subscribe to John Henderson. Thank you so much. You know, I look at every subscription as one that I've earned. I don't know how many of the subscribers of the channel are active. I do not know. I think my gross estimate on the channel would be about 2,500 to 3,000 subscribers that are very, very loyal, and that really is the organic base of the subscriber base that I really tailor my message to. I don't typically look at it. I've never had a viral video, which hasn't been conducive to picking up a lot of people who watch me once and then never watch me again. That's fine. But thank you so much. I really appreciate that. Let's grow wealth together. What can I say? Um, I provide that opportunity to each and everyone that comes on. Stock investor guy is in the house, and he is a channel creator. Um, and really appreciate you kicking on late in the live stream, of course, right? So if you do end up kicking on here earlier, I'll get you that shot out. There's just so many channel creators that come on now to help me in the cross dialogue and provide the opportunity for new subscribers that are making their way to the message as well, to get different opinions. And that's why I provide that conduit for those new channel creators as they pop on. So I know I'm going to get dumped on here with a bunch. I've got Heart 76 in the group. Just can't seem to get my friends and family on board with investing. How do you overcome that? Well, that's the question of the night right there. I really think I could make a YouTube video out of that because it's such a justified question, and it's legit. I will say that I mean, I have a brother that doesn't see eye to eyes, never asked me, nor do I push it on him. I've provided the opportunity to say, "Hey, if you ever need anything, let me know. I can help you." Yeah, yeah, yeah. You know how it is. Yeah, okay, okay. I'm doing my 401k and that's good enough. I've got 100 grand in it and I didn't even know I was investing in it. I just invest and it's fine. You know. Um, this type of approach to investing, I will say, is not for everybody. The prospects of investing on your own are far too scary for a lot of people. And I will contend that those barriers to entry or the being scared shouldn't exist. Okay, but they do. They do. Those are those natural stigmas with regard to what are you talking about? You came onto YouTube and talked to somebody about the prospects of investing in this stuff. Are you stupid? Like, what is your problem? Yeah, yeah, yeah. He's pretty good, man. You should go check him out, man. The independent investor chain is pretty good. Yeah, he can help you a lot. You're crazy. You're an idiot. Here's a card, and you can go talk to my financial planner. That's typically some of the responses that you're up against. Your question is interesting. I typically like to use the performance over a 40-year lifespan of an investment portfolio. and what the effects over that portfolio of a 3% industry average fee is that would be reflective of a managed portfolio as opposed to what a self-directed portfolio would be able to perform at. What I mean by that is, okay, you're investing with a financial planner, good for you. Okay. Do you know what you're paying in fees? That's always a good question to ask. Because if you're going to justify being with a financial planner, you have to be able to justify why, in fact, you go with a financial planner. And the fees should be one of those questions. You can ask them directly and they'll glean over this topic. They really will. They'll breeze right over the top of it. And for the unprepared ear, they will succeed. Okay. I could do it. I could do it. I could glean over somebody if I was a financial planner, because people who are not prepared to really defend self-directed investing and how much the impact it makes over time, then they're gonna succumb to the pressure of seeking representation. Again, because it's what everybody does. It's the status quo. It's just how you seek out your exposure to the market, right? And you've got this thing over here, well, investing on your own, what the hell? What if I screw up? You know? What if I need advice? What if I don't get my yearly meeting with my financial planner? God, they're not going to like me anymore. My goodness, they're not going to take me out to this yearly golf trip that they take me out on. I think there has to be a deeper understanding and acknowledgement to all the benefits of what self-directed investing brings to the table. Okay. When you're with a financial planner, you pay for all the advertisement that's on the television. Okay. You pay for all the office space in all of the strip malls. You pay for all the banquets, all the awards, all the everything that's in the fee and disclosure form that nobody reads. So you can't have it both ways. You can't say, oh, because you're seeking out your opportunity as a self-directed investor, um, you're going to somehow fail because I go with a financial planner, but I don't know anything about explaining why I go with the financial planner. You can't have it both ways. I think a lot of people who understand the impacts of fees over time would just feel more comfortable being with a financial planner, but they do, in fact, understand that they are paying for that level of service. In that particular case, I think that's a little bit more justified than going with a self-directed route and not having the proper preparatory education to actually succeed as a self-directed investor, because you really have to understand all the benefits of why the market's down 40% and why somehow self-directed investing gives you still, in fact, a very, very real strategic edge over anybody with representation. You have to understand that. And the last thing we want to do is subject somebody to a self-directed program that comes on to, let's say, my channel or any of the other self-directed investors in the community and are very excited about the prospects of self-directed investing, but couldn't tell you the first freaking reason why they're doing it. Okay. And just saying that you came on and came across a channel like myself that is excited about investing, that's not good enough for me. That doesn't meet muster with me. Okay. You really have to justify this stuff on your own. Understand that the landscape has changed so much over time that owning the S&P 500, what management do you need over owning the ETF VOO? What management is necessary to put that into a no-cost M1 Finance account for yourself? What management is necessary to deem the 25 or 50 or $100 that can fit into your budget to dollar cost average that program? What planning is necessary to set that portfolio up for portfolio reinvesting or dividend reinvesting if you go with some other broker? What planning do you need to understand how exciting it is to seek out free stock trades in the stock market right now that didn't exist before this year, worth acknowledging. Now it's worth acknowledging because the major brokers have jumped online with this very strategic initiative, and the beneficiaries are individual investors, right? Being able to enter single stock, being able to enter ETF products without the incurrence of any fees. Okay. Um, Certainly bring them onto the channel. That'll help. I can motivate a lot of people. I can explain the ins and outs of why this is worth looking at. I don't look at the independent investor channel as needing to sell anybody on anything. No way. As a matter of fact, I could never wake up every morning and be a salesman, ever. Okay. I despise selling things to people. No way. This is an awareness channel that a lot of people are not aware of this topic. Not. And just by nature of you coming in here, Heart 76, and acknowledging to me that somehow, some way, you found your way into this very small, quite frankly, unknown channel tells me a lot. Okay. So, congratulations to you, honestly, for making your way in here. I think that's a start. Don't be in a rush. I think, in all fairness to your family, whether it be immediate or your secondary extended family, whatever it may be, give it time. You guys research this topic on your own. I'm right. You do whatever you got to do to justify and answer your questions. If there are answers that you can't find out there to the questions that you might have, certainly bring those back into the communities, and we'll chew on them and get you an answer for sure. Um, but I'm right. I'm right in the perspective that a lot of people need to know that this option exists, and a lot of people just do not. So, with that, guys, I will end the live stream. We are right at 2 hours. I thank you so much again to all the channel creators, man. Have a happy Thanksgiving, remainder of your weekend, man. Stay safe. Enjoy those things that really are truly what we should be thankful for. I spent this live stream talking about things in investing that we should all be thankful for, and we are. But really, what it kind of comes down to: family, health, safety, and security. Those are the things that are really most important in life. Really appreciate you guys' engagement tonight. With that said, I'll be signing off. Make sure you tune in next week for live stream 75. It ought to be special. You guys take it easy. I'll see you next week.